Our leasing portfolio includes real estate leases, transportation leases, manufacturing machinery and equipment leases, grower contracts, which is a pay for space arrangement, as well as office equipment leases. From a lease administration perspective, we use a decentralized approach with respect to our regions, but then within each region group, they have a centralized approach as it relates to the maintenance of lease agreements, the negotiation of lease agreements, and then the administration from a Nakisa perspective. From an accounting perspective, as we approached the leasing standard back in 2018, 2019, we had to take into consideration our diverse finance structure. We are a very unique company in that, from a JBS USA perspective, we are a privately held organization which reports in US GAAP. We do have a majority-owned subsidiary, Pilgrim's Pride, which is a publicly traded company in the US. And then ultimately, we report up through JBS USA in Brazil, which is also publicly traded in Brazil. So we have both reporting requirements in US GAAP as well as IFRS. In thinking through transaction volume, one would ask, what's the difference before the lease standard change and after the lease standard change? You're paying lease payments before and you're paying lease payments after. But when you think about the transaction set, the day before the change, it was really a two-line journal entry: debit expense, credit the vendor. After the leasing standard change, you have up to as many as 6 transactions per contract that we now need to account for, both from the asset perspective as well as the liability perspective, both from our current liability and non-current liability. So that transaction volume, in essence, grew phenomenally from before adoption and after adoption. So we needed a system that could handle those transactions in a systemic approach versus manually tracking everything in Excel. In addition, we also have multi-currency. We do have one unique situation with our Mexico operation that has a functional currency that is different from its transactional currency, and we needed to maintain the functional currency relationship in the application as well. We have approximately 45 users globally and over 40 company codes. We are also a very acquisitive organization, so we tend to acquire at least anywhere from 2 to 4 companies per year, and so we need easy adoption or scalability into the application as we continue to grow. We also wanted to ensure that we had seamless communication between the subsystem and SAP. And then the last piece is related to tax. As you can imagine, being both multinational and having dual reporting structures, our tax situation is also quite complex. So we needed a system that would also support the tax nuances as it relates to leases.